Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 18th, 2025, and we're diving into ManpowerGroup's second quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ManpowerGroup, a leader in global workforce solutions, has just released their Q2 2025 results, and there's a lot to unpack, especially given the current economic climate.
Revenue and profitability overview. Let's start with the top line. ManpowerGroup reported revenues of $4.5 billion for the second quarter, which is flat compared to the previous year. However, they posted a net loss of $67.1 million. John, can you elaborate on these figures?
Absolutely. While the revenue remained flat, the company faced a net loss primarily due to a non-cash Goodwill Impairment charge of $89 million. The gross profit margin slightly decreased to 16.9%, reflecting changes in business mix. On a positive note, SG&A expenses declined year over year, indicating effective cost management.
EPS forecast and analyst expectations. ManpowerGroup's adjusted EPS came in at 78 cents, surpassing the forecast of 69 cents from four analysts. Despite this, the EPS decreased by 43% in constant currency. What are your thoughts on this, John?
It's a mixed bag. Beating the forecast is a positive sign, showing that the company managed to exceed expectations despite the challenging environment. However, the significant decrease in EPS year over year highlights the impact of restructuring costs and the impairment charge. It's a testament to the volatile market conditions they are navigating.
Strategic initiatives and market trends. ManpowerGroup CEO Jonas Prising mentioned their strategic focus on diversifying, digitizing, and innovating. How is this playing out in the current market?
The company is making strides in becoming a strategic workforce partner, especially as tech transformation accelerates. They're seeing signs of market stabilization in the US and parts of Europe, which is encouraging. Their investments in AI and digital capabilities are expected to provide more value to clients and candidates, positioning them well for future growth. The guidance for Q3 EPS is between 77 and 87, indicating cautious optimism.
Operational challenges and impairment impact. John, let's talk about the operational challenges, particularly the $89 million Goodwill Impairment. How did this affect the quarter's results?
The impairment was a significant factor in the net loss reported. It primarily affected their operations in Switzerland and the UK. Additionally, restructuring costs and the transition of South Africa and New Caledonia to franchises impacted earnings. On the bright side, there was a positive currency impact of 4 cents, slightly offsetting some of these challenges.
Key takeaways. In summary, ManpowerGroup faced a challenging Q2 2025 with flat revenues and a net loss, but they are making strategic moves to position themselves for future growth. John, any final thoughts?
Despite the hurdles, ManpowerGroup's focus on digital transformation and market stabilization efforts are promising. Investors should keep an eye on their strategic initiatives and how they navigate the economic landscape in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ManpowerGroup's performance in the comments below.